Hello, everyone, and thank you for joining us again on Wealth Matters for Physicians by Altfest Personal Wealth Management. I'm Mike Prendergast, a director here at Altfest and host of this channel, which focuses on providing physicians with investing and personal financial planning insights to help them achieve their important financial and life goals. Before we introduce today's special guest, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal financial lives in a fully objective and fee-transparent manner, while as a fiduciary always putting their best interests first. We are honored to be the preferred wealth manager for members of the Medical Society of the State of New York, the preferred wealth management education provider of both the New York chapter of the American College of Surgeons and the New York State Society of Orthopedic Surgeons, and a corporate partner of the Medical Society of New Jersey, amongst other associations. Our guest today is the founder, CEO, and Chief Investment Officer of Altfest Personal Wealth Management, Dr. Lew Altfest. Lew is a 15-time Medical Economics Award winner and longtime Medical Economics columnist. In addition, Lew is a member of the Barron's Advisor Hall of Fame and has been named a Barron's Top 100 Financial Advisor in the U.S. 14 times. With the stock market off to a rocky start this year, it is a good time to review your portfolio and make sure your target asset allocation is in line with your financial goals. This is the first of 2 videos with Lew. During these videos, I will ask Lew about Altfest's investment philosophy and its outlook on the economy and the markets. We will also cover whether Lew has any general recommendations for physicians, any investment predictions for 2022, and see if he can take a few questions we have received from physicians. Let's talk about Altfest's outlook on the economy and the markets. A few questions for you. Where do you see the coronavirus situation now, and how do you think it will impact the U.S. economy in 2022?
I think I'm going to stay in a sensitive matter. I don't want to opine to doctors other than what I will say is I think that many, not all, think that things, at least cyclically, are going to look better for a time. And I've built that into my thinking, subject to adjustment if needed. But I think that that the COVID situation will not be as onerous going forward. That means that we're going to go through an economic period now where the fourth quarter was gangbusters. People, until the end of the fourth quarter, decided they're going to go out and spend. So we're going to have 7% real growth, my estimate, versus a normal rate of 2%, maybe 2.5% in the fourth quarter. And then everybody's rushing to, with the COVID coming on, and with the fact that there was a shortage of goods that resulted in an upsurge, and the first quarter, people's slowing down of expenses, the upsurge of goods is going to have an effect in which you could even have like zero or negative growth in the first quarter, and then in the second quarter we should have a bounce back from that, and then at the end of the year we'll be back to normal growth. In general, there's going to be, after the first quarter, higher than normal growth for a time.
Thank you very much. And I know that we've been hearing a lot about inflation lately, and so what are your current thoughts regarding it? It sounded like it was pretty high in the last quarter.
Oh, the Federal Reserve finally woke up to inflation being a potential real problem for a time. They just had to look at the various factors and say, look, fellas, we poo-pooed this. It's time to move. They've just done this. They're moving, and it looks like we're going to have some real action on the part of the Fed, which means higher rate increases, interest rate increases, and we're going to have other difficulties because of that, more tightening. But I've already given you my economic, I built that into my economic assumption. The Federal Reserve, but go ahead, I don't want to play out the whole thing.
Sure, I know the one thing I know that you've mentioned is that labor costs are a big factor in inflation. How do you see labor costs affecting inflation in this year?
Yeah, everybody thinks that inflation comes from mostly from just like different metals and mining and that stuff. But inflation really comes from fundamentally from it will come from shortages for a time, but it really comes fundamentally from people who are now able to get higher increases in wages as our country is reaching full employment. Full employment is good for the worker. It's not so good for the country because you're not going to be able to expand more than a certain amount without hiring more people. Maybe the higher rate increases and the fact that we normalize and people do go back from what they were out of the labor force, they re-enter the labor force, will help. But full employment is a concern. The Fed raising interest rates will slow down the economy, as I've mentioned.
Thank you. And before we move off our general focus right now on the economy and start talking about the markets, is there anything else that you want to talk about or say regarding the economy this year that you expect? Or not really?
I think inflation at the end of the year, inflation is a key, and inflation will be, even if it increases from here, from about a 7% level, it will decline over time as shortages of goods come out. So we'll still have inflation, but the inflation will turn down some as the year progresses, beyond the first or second quarter.
Definitely hope so.
Yeah.
So hopefully in time for Christmas, the holiday season 2022.
Yes. That looks like a good, reasonable bet.
So now talking a little bit about the markets, what we're seeing the stock prices jump around a lot lately. What do you think about stocks right now? Are they overvalued? Are they fairly valued? Is this a bargain time?
I think there's no question that stocks are high relative to history, but people have money and can spend and can afford, many middle class people in particular, can afford to buy goods which will add to company profits. So that is going to help. And when you have a high relative valuation, you can have an adjustment, a significant adjustment for coming out of the blue. Obviously, if something happened in Europe with Russia's moves, that would be not so much out of the blue, but that would be a negative factor for us. So, but we don't have to have a recession now, and it's conceivable that all that money and growth and high corporate profits can prevent us from going into a recession now and allow stocks to move higher.
Thank you very much, Lew. And what about technology stocks in 2022?
Yeah.
They've done really well last year. What are your thoughts for them this year?
Technology stocks are high. They've already, at the beginning of the year, been hurt. They'll do well if we have a recession, but relatively well. But otherwise, technology, this may be the year of the change in technology and the year of value. That's the way we see it as a firm. We have much more money in value than we have in technology. Although I would say recently with a decline, in some cases we've started to nibble at some technology, particularly international technology. Like we bought some of a company that I won't mention the name, but it starts with an AL in technology.
Interesting. So you've given us a quiz. We're going to have to try to guess what it is. So for U.S.-based investors,
but I don't want to get my doctor friends frustrated. That spells Alibaba, foreign company, Russia, with its difficulties. Alibaba will do well as we go forward. And it is the Amazon with some even more spread out impact, although Russia is taking away some of that impact, but it's the firm in retailing.
Sure.
And not Russia, in China.
Sure, and I know we'll probably talk a little bit more about Asia a little bit later on in the interview. This is the end of our first video with Lew Altfest. We look forward to you joining us for the conclusion of our interview with Lew Altfest in our second video. If you would like to talk about this topic or anything else related to your investments or personal finances with an Altfest professional at no obligation to you, please contact my colleague Jesse Freeling at 212-406-0850 or by emailing Jesse at his email address, which is in the information about today's video below. If you like this video about optimizing physicians' personal finances, please hit the subscribe button below so you can receive notifications each time we release a new video. If you think a fellow physician would find this video interesting or useful, please feel free to share it with him or her. Lastly, this channel is for you, and we want to make sure it is as useful and as enjoyable as possible. If you have topics you'd like us to cover in the future videos, like or dislike certain things that we're doing, or have any other feedback, we would love to hear from you. So please share your comments in the comments section below. Thank you very much. Well, that's it for today, physicians. I look forward to being with you again in our next video. Until then, be well and keep on optimizing your finances.